Hey, welcome. Let's look at GJ for yesterday. This is a trade. This vertical line is for the interest rate, US dollar interest rate yesterday. I was looking at taking sales here. This was my stop loss. Ignore this. Let's see this one here. This was the setup I was monitoring, like paper trading, but this is the main trade because we were in seller's market structure. My bias was bearish. Um, I was expecting the interest rates because there was something a trader mentioned once and it has stuck to me, which is very simple. The fundamental tends to do what? Confirm the technicals. Whenever a technical analysis, insofar as your story is correct, you have read it very well, you can tell the story by infusing all the parameters to make your story validated. Okay, the fundamentals just comes to make that technicals confirmed. So this is what I mean. I was looking for sales because we're in seller's territory on the daily, on the 4 hours, and on the 1 hour. So this was just a sell I was looking at in order to confirm that price was going low, and the technical fundamentals was just there to do what? Aid price action, because this trade was opened by this trade was triggered by London close, which if I move to the next listing, you look at it, this was where I was triggered in the trade. The price just went up, failed, did what it was supposed to do, did not take me out, which was very beautiful because this was outside my trading time. But I was just banking on, you see this vertical line again, I was just banking on the volume that was coming with what? US dollar interest rate or FOMC. And immediately it was time for the FOMC, there was a slam dunk to my TP. Now let me show you that on, look at it, look at where trade was triggered in. I waited all through this. I am very sure that if not for the how would I put it? I just let it be. It's like say set and forget. If it hit my stop loss, okay. There was no managing of trade, no closing of 50% once it breaks this high or that high. I just let it be. It hit my stop loss, okay. I'll get another position. But if it doesn't, then my TP. I've watched so many trades when I started understanding this strategy. You close the trade during you see price driving closer to your stop loss, you close it just for you to turn your back, face the chart, and price is playing just as you anticipated. Look at all through this struggling, it didn't take more than 30 minutes for price to hit the TP, just one strong bearish candle. So this was what happened on British pound Japanese yen yesterday. Now let's look at what price is gonna do today. For today, I would advocate or recommend, for me, I'm not going to touch anything until price has given me a clear price action. But before I finish with GJ, there's something I want to just touch. If you look at, let me close, take all this out. If you look at GJ for yesterday, this is where I want you to focus here. If you see this price action, it looks like a train of bullish candles going up. Even if we remove the colors, let's say it's all black or all white, you look at this is a bullish candle close, this is another bullish candle close because price opened here, close here. This is another bullish candle close, price opened here, close here. So you cannot categorically say that there is a rest. You can only say that this low broke this candle, the bottom wick broke this and this wick, but you cannot categorically say that there was what? A rest in price. So what do we do from there? This is what I noticed from yesterday, which this is FOMC. This is where I'm getting the feed. But I went and looked at Owanda. If you look at Owanda, still that same place I talked about. Owanda instead gave us the rest, which is this. You see that on FXCM, this was a bullish candle close, but on Owanda, this is a bearish candle close, which is very significant because it makes a whole lot of difference. It indicates that this is a demand zone holding in this seller's territory. So a once price does anything, if this was on FXCM, this was a sweet sell opportunity. In fact, there's a strategy that is still in the pipeline, which I'm not going to talk about yet until I've observed the probability of the win rate versus the losing rate. So if not, this was a sweet sell opportunity, which if you look at it back on the FXCM, if you look at it back on the FXCM, you drop down to the 1 hour time frame, you will see the sell opportunity there, which is here. Which if I bring back all this is where the sell opportunity I was looking out for here. Sell entry here, stop loss here, TP was hit here. Meanwhile, this other position was when I was evaluating that this is a potential sell entry using the 4 hour time frame. TP was hit to the T here. This was a potential sell entry using the 1 hour time frame. This was the TP here. So this is TP for 1 hour. This is TP for 4 hours. But because on FXM we did not see that breach, hold, then breach, it was all considered as one whole impulsive move. So that was just where the setback came from. Okay, so for today on GJ, we are waiting for the first of all, we have Swiss franc news this morning. Then by 7 a.m. EST, Eastern Standard Time, we have the interest rate for pound. So for me, I'm not seeing a clear market structure for sell yet, although we are in seller's territory. But I'm not seeing any clear market structure for sell. So I'm just going to chill. Let's wait to see what price is going to do. For today, like yesterday, this trade was activated during London close, and the TP was hit. By grace of God, we had all our anticipations met. But trying to take sell because we're in seller's territory would be forcing the hand of price action to do what it wasn't ready to do yet. Okay, so this is what I got on British pound Japanese yen. No no buyer, no sell setup yet, but we're in seller's territory. If I would prefer, if price would rest, break go higher, then do its retest, then like this I'll be anticipating further sells. But until we get a structure that looks like this, there is no sell yet. Don't forget, this is also an area to be careful. Price came and tapped this area that it has always been respecting, which let me show you. Yeah, look at it. If you remember back then, I will recommend you watch the previous videos to have a very good understanding to be able to tell the story of how price action is behaving. Okay, if you look at it back then, price had always been reacting from this level, if I even go back a few periods, you will see price reacting from here, from here, from here. It will drop, but whenever it taps here, the next bullish candles that will come will be very impulsive. But this was where price was struggling to get out of this zone. When it eventually tapped into even the deeper zone, which is this, look at this cross section here. This is ushering us into a deeper zone. What happened? A strong bullish momentum. It's more complex than the way I'm putting it, but I'm trying to simplify it so that it cuts across even for learners and those who are advanced. Okay. Then again, price had tapped it. As you can see, these are strong rejection wicks. Strong rejection wicks. It tapped it and closed bullish on the 1 hour time frame, even taking out the guy who started the sales. Okay. Apart from taking him out, you see that there are strong rejection wicks to the bottom here compared to the top. That's indicating that the buyers are gradually trying to sneak in. So there's no need to rush for buys or sell at the moment until the setup is ripe. Okay. With that being said, for gold, the same thing applies, is applicable in gold. We are still in this range. Okay. Yeah, we took out this high, but price was smacked down once price hit this level here. Price got smacked down. So until either we get a bearish breach confirmed with close, there is no sell, until we come up, let's say get a bullish breach above this level here, there is no buy. Yeah, you can take some intermediate buys inside of this range, like some persons I'm sure would have already been triggered in for buys, just like this ping pong we've been playing. Sell here, buy here, sell here, buy here, sell here. Most persons are already triggered in for buy, but we don't trade like that. We like trading, ensuring that all parameters have been met. So since we don't have the meeting of all our parameters, we wait until the setup is ripe. Okay, we like it ripe. Okay, the last but not the least is what? Bitcoin. Now Bitcoin has been incredible in the sense that I'm expecting Bitcoin to keep dipping at least to the $14,000 price level. But until then, what are we going to do? Yes, this was the level I talked about yesterday, that price could react from here, because this is a very good level that price is really being affected by. Here, price reacted. All of this below here is a fake out. Yes, the sell worked out, but all of this is a fake out. Price came back in this range, which is this zone here, the top, the low, the top. So you see the range. All of this again is a fake out. So until price takes out this demand zone, we don't have any sell. As you can see here, price is taking out this high, ushering us into what? Potential buys. Okay, ushering us into potential buys. So I'm anticipating price to rally. Okay, rally. But on the other hand, don't forget this is clean traffic to the left. So it could rally deep, but if I were to take this trade that has already started playing, this is where I'll put my entry, my stop loss, and somewhere here will be for my TP. And we can leave the runner to keep doing what? Appreciating, giving us bigger returns. On the other hand, if price reaches this point and fails to continue higher, then takes out this demand zone, we anticipate what? Further bearish momentum to retest this low. So this is what I'm looking at on Bitcoin. Okay, if you're new here, do well to subscribe. If you're old and you haven't, what are you waiting for? Subscribe, hit that notification button, select the all option so that you'll be notified of every new video, comment, and what? Like. So this is what I got for you for today. At the moment, don't forget there is pound interest rate. There are all of these pound interest rate and the Swiss franc and fundamental. They are both high impact news. So trade safe and be careful. Peace. Baraka Bashad.